right, so we have quite a few participants already online, so I think we can already go ahead and start. So welcome everyone. We are here today with Karar and Artificial Intelligence Society Bahrain, with your host, that's Aeon Digital, Reimagining Business with Artificial Intelligence. And today we're going to focus on finance in the GCC. So just by introduction, I'll introduce myself first. My name is Imelda. I am working as the head of marketing at Aeon Digital. Aeon Digital is a fintech company that's headquartered in Bahrain. We do have offices in the KSA and UAE, and we also have an office in Pakistan. So Aeon Digital builds digital banks. It offers a platform that provides solutions to enable banks to go digital with low risk and low cost. I'd also like to introduce our co-host, Kathy Beasley. Kathy is the head of marketing and communications at Karar. So Karar is a region's leading advanced data analytics company. It specializes in consulting, decision analytics, and software technology. And then I'll go quickly over the agenda. So we've introduced the moderators, and then I will go ahead and introduce the speakers. The topics are on AI and data play, AI as the driving force, the impact of AI in finance and the GCC, and customer experience and decision making, and followed up by a Q&A section at the end. So our first speaker is Dr. Jassim. Dr. Jassim is the president of the AI Society in Bahrain. We have Amer Janjua. He is the Group Chief Product Officer of Aeon Digital. We have Zaid Kamhawi. He is the CEO of Karar. We have Atiq Khan. He is the head of artificial intelligence at Aeon Digital. And finally, we have Shiraz Sharif. He is the head of data and cybersecurity at Aeon Digital. So let's get started. So the first section is on AI and data play. And the first question we will be directing to, just one moment, we will be directing to Amer Janjua. Amer, how is AI transforming the landscape of businesses and our daily lives?
Awesome. Thanks, Imelda. First of all, really glad to be here. And thank you, everybody, for dialing in. Imelda, thank you for the introductions. So, I did kind of had a good thought about this question, to be honest. I think it's a quite wide topic to talk about. So I'll try to really narrow it down and saying, what are the core 2 or 3 things which are happening actually in the market. And because it's kind of a cross-industry, it's just basically looking across the industry. So I think it would be just kind of a bit of a reference around the industry as well. But I think eventually we will kind of step into financial services. So if I just kind of if I can start with the market context actually for how AI is transforming the landscape of business. And then I would touch base a bit around how it's kind of really, kind of changing our lives as well. So given the market condition at the moment, I think there's a massive shift going on in the market. Most of the industries, and regardless of which vertical you work in, all of these industries have been impacted in the last year or 2. Now, I think this is becoming kind of a new norm now. Competition is increasing. There is a challenge around how to really sustain and drive, the business forward in this kind of environment at the moment. Most of the industries, as I mentioned, whether it's about financial services or whether it's about retail or whether it's FMCG, there's quite a bit of a challenge they are facing, because it's the challenge of this paradigm shift But obviously, as we're talking about this pandemic, which is happening lately, I think it's kind of a really accelerated that paradigm shift towards technology. Saying that, I think there's still some industries which are doing pretty well, actually, even within this pandemic. And quite interestingly, I was looking at some data recently. So if you look about all of those tech, kind of everyone who is connected to the tech industry, especially where there's a tech platform, economy, if you want to talk about, those companies and some of those individuals, they are doing really well in this kind of a space at the moment. So very kind of a recent example is from Amazon to, Elon Musk, or if you think about Pfizer as well. Interestingly, a couple of data points actually. So I think combined in the US, around 600 kind of billionaires in the last 12 months combined, they have made $1.3 trillion actually. And when you just dissect them, which industry they're connected to. So I think majority, around 70 to 80% are connected to technology industry. But then some kind of are connected to wealth, advisory, etc. So that kind of, I think only that one industry, which is around tech industry, which is kind of really doing well. And that there's obvious reason behind it, because, this paradigm shift, which I'm talking about, on how almost every business is moving towards this platform economy or enabled by this digital transformation or technology. I think that's where the, direction is moving towards. If I think about, if you're a business in today's world, what are your core goals actually? Your core goal is at this stage to stay relevant to the market and specifically relevant to your customers. Your core goal at the moment is to sustain and grow, but at the same time, reduce your cost, because there's a shifting dynamics. And when we talk about shifting dynamics, it's not only purely that technology is becoming the core a sales and service delivery kind of a model, but at the same time you need to take your organization with you as well. So which means the organizational culture, etc. You need to take this along with you actually as we move towards this paradigm shift towards technology. So if I really kind of put 3 or 4 key items where business are focused today, so it's all about business efficiency. So what does that mean? It means how can they do more with less, how they can reduce errors so they don't have to repeat again and again, how they can increase speed. So that's kind of a business efficiency is one of the key areas which even in our experience, most of the businesses we talk to, they are very focused on. Another thing they really want to bring to the table is predictability. So no surprises, right? Especially in this volatile kind of environment. So the idea is how we can look at things. And obviously, when I say things, majority of this kind of enabled by data, how we can look at data and predict on what's going to come towards me in the next 2 months, 4 months, 6 months, how it's going to come and impact my business. So how can I build some predictability in the business so it's not really impacting me? There's no surprises for me. Then lowering the risk of the business. So the decisions I'm making today, how they're going to impact me in the future and how I can really make the right decision. And finally, when you talk about revenues, I kind of can quite directly correlate the customer satisfaction or customer experience / NPS scores directly to your revenue. So again, if I'm a business today, I would be really thinking about how can I really lower my cost? How can I really lower my cost for sales and service channels? How can I really improve the turnaround time for my customers? And how I can really offer this very tailored kind of a service, which can be delivered at any time they need, whenever they need to fulfill any of their requirements. So as a business, these would be 3 or 4 core areas I would be very focused on. Why? To become relevant or stay relevant, keep my strong customer base, while at the same time increasing my customer base and reducing the cost. So I think this is very kind of a critical kind of a dynamic over here. So if I think about it, purely from business lens, there's a lot of financial services firms. Again, one of the study from Deloitte, it says around 70% financial services firms, they're using machine learning to predict cash flow events, for example, fine-tuning their credit scores and detect fraud. And obviously, we will hear more about the credit side of things in this kind of a conversation. So I think there's a lot more focus on how we can bring all of these together using AI technology at the back end. Then again, if you think about wider kind of a context, outside of financial services, if you think about Amazon, so Amazon is kind of applying these AI, and the reason I picked Amazon is because every one of us kind of somehow interacts with Amazon. So, very simple example for Amazon would be click to shop kind of time. They reduced it to, I think, 15%, which was really around 70, 60, 70 kind of a minutes. They just kind of moved it down to 15 kind of a minutes now. So just using AI. And I think very common example, which every one of us might be interacting with on a daily basis, is around Netflix. So, just by improving search results. So what they figured out that, having this 70 or 90-minute pause between when you're searching your movies, customers do get switch off actually, because, it takes more, a bit longer, which is around 90 seconds. So what they did, they started using AI at the back end to start proposing you or start suggesting you certain titles which they think you would be really keen to see. And that's how they really improved the customer engagement and retained customer over the longer period of time. And those customers are not really going off or churning. So which means they're kind of really, I think, according to them, they kind of around saved $1 billion just by doing that. So that's the kind of aside from the business. So all of those areas they really focused on. But if I just switch sides now, so if I think about consumer side, all of us, we kind of interact with this technology almost every day. And interestingly, some of this technology would be so invisible that we don't even realize that we are interacting with, AI-driven technologies at the back end. So, for example, if you think about your everyday use, I'm sure we just come across this digital smart assistants. We talk about Siri, Alexa, and to be honest, my Siri, even I don't even speak to the Siri, it's listening, right? Something just kind of starts popping up and saying, did you ask me something? I was like, no. But the thing is, Siri is still listening. So it's kind of getting so embedded into our life every day that we don't even realize that we're interacting with this AI-powered kind of capabilities on a day-to-day basis. Some other examples, from our daily life, very kind of a generic example could be your email inbox filters, for example. How do you set rules? How do you really, enable the right kind of information coming and reaching to you? And there's all kind of engines behind it, which are working behind the scene to give you this seamless kind of experience. Think about this shopping recommendations, which always, you kind of go onto certain websites, especially again, going back to Amazon, you kind of do those kind of shoppings, sprees, I would say, and shopping therapy. But I think that kind of really gets enabled by this very smart engine behind the scene, which really helps you to do things in a very different way. Very simple. Another simple example is facial recognition, which I think now we are getting used to almost on a daily basis, even to make a payment, which is a contactless payment, or even to open an account or do anything. It's basically facial recognition. But the thing is, there's a lot more kind of technology behind the scene working to enable you to do that. So if I think about, just kind of some facts about it, so around 40% of us, we use kind of a voice search function at least, once every day. Again, there's a research which says, 40% or 46% Americans, they use some digital assistants actually interacting with their smartphones. So I think in conclusion, as I said, this question was quite wide, but I think in conclusion, it's all around us in different shapes and forms. There are multiple touch points in our daily life almost every day, and that's driven and enabled by AI. And most of the time, interesting thing is most of the times we don't even realize that it's there. Again, if you ask me, have we reached to the full potential? Not at all. I think there's a long way to go. But I think we are on the journey, and I think we'll just kind of definitely get there at the right time. But as I said, it's a long way to go, but I think it's kind of already started impacting our lives on a daily basis. Imelda, that's about it from me on this topic.
That was the perfect segue into the rest of the webinar. So thank you for that. You really did set the scene. And I know it's a very wide scope question, but you managed to get the very gist and the important part of it, although it's a very actually detailed topic, which we're going to go into a little bit more. So the next question will be directed to Shiraz. Sorry. Shiraz, the question for you is, Why is AI playing an increasingly critical role now? And what are the best implementation strategies?
Thanks, Imelda. I hope you guys can hear me well.
Yeah, we can hear you.
Great. So thanks, and of course, thanks for Amir, of course, setting up the whole scene. And it's a very broad, topic to discuss AI, and definitely not 1 hour we can ever cover such a thing. So a lot of talks around AI, and there's a lot of buzzwords. A lot of misconceptions where people believe that AI maybe simply is just the automation. Uh, how I see is that, of course, it's AI is kind of like new physics, really, which is simplifying our life by understanding the data around us and helping us making the better decisions. So AI is technically changing how organizations are generating and utilizing the insights, especially the financial institutions. And it's all about enabling us to unlock the value of data. So why now, basically? Because with a lot more data than ever before, and it's being produced exponentially every minute. Even now that we are talking, there's a data being generated. The intelligence is actually becoming a critical need to access and understand all of our data and be actually able to identify the hidden patterns and the information within the data. And with the right tools and technologies that now we have available, we are now actually able to find the insights literally from any type of the data format. So it's the explosion of data that is happening. We have a high computational power. We have more stronger algorithms. The increased storage at clouds, of course. The overall speed to scale up, which means we don't need an expensive hardware anymore. This has taken us away from a huge capital expense to a decent operational expense, really, by pay for what you use and when you use. So it's possible due to the digital progress horizontally. And I see that what's common here is the intelligence, the speed, and the power, and it's all fueling the consumer demands driven by data. So I know Amir has, of course, given excellent examples of it is touching us every single day. We don't even know it. And it's all in our smart devices and even the IoT devices where there's a data being generated and being pushed into some way or another to be able to actually unlock some sort of insights. I think the other part of your question is that how do we actually go about implementing it? So there's hundred of ways. Even simply like you ask anybody for AI definition, everybody will come up with a different definitions depending upon what industry they're in. I think the best way of implementing AI would be that look for the potential AI opportunities. Besides designing a better data management lineage and governance model, you'd want to actually analyze the data that is produced by your company, focus on what areas of business AI can be applied to, define your business needs, evaluate, understand the existing tech capabilities. Don't just go and buy the fancy products. Define use cases and the expected outcomes. Most importantly, break them down into smaller pilots and test projects. So this could be improving a call center operational efficiency or augmenting the human abilities, using virtual assistants or robo advisors, for example, for personal finance. All these different examples that are out there. So this should actually let you start small with AI for more faster rewards. Make sure that you align your outcomes of the smaller tactical projects with the longer term strategic AI goals of your organization. So, you're actually then achieving and working towards one single goal. So this is how, would be the best thing, if you do it. One last point I would do want to mention about when you're implementing the AI, form strategic collaborations. Don't wait for too long. Take a wide angle lens to look at your current business processes, establish an AI strategy, build innovative partnerships with relevant fintechs, and leverage from the pool of AI domain experts that are out there. So the earlier you start evaluating how AI can enhance your processes, the sooner you gain business advantage. Finally, like I mentioned in an article recently I released, AI is an infinite journey. So do create long-term AI goals, align them with your vision, and often revisit your business strategy to fine-tune as you grow. That's it, Melda. Yes.
Thank you, Shiraz. So this was actually perfect timing because Atik and Dr. Jassim have just joined us as well. And that takes me over to the next question that goes to Atik.
Hi, Amanda. How are you?
I'm good, Atik. How are you?
Good, good. I've actually been connected since the beginning, by the way. So I don't know.
Okay, perfect. So here we are. So the next section is about artificial intelligence and how it's a driving force right now. Although Shiraz and Amr also introduced that, I think we're going to get into a little bit more detail about that. So the next question is for Atik. Are AI applications in finance and banking the center stage in this era for digitalization?
So, in this era, yeah. So AI, the question is AI application in finance taking center stage in this era of digitalization. So yes, so AI has definitely been, it has developed to a certain level of sophistication, and it is backed by the ever-increasing computational power, and it's become very, very mainstream. In fact, if as Amir explained, that when it comes to digital assistants, may it be Siri or Alexa, Netflix, Tesla, even in automobiles. So in every industry across, you're seeing more and more application of AI and technology. Rather, I think the 9 out of 10 top global companies by market capitalization are actually all technology companies. They're all using AI, and AI has actually propelled them to become the market leaders. The same trend and same phenomena we are seeing in the financial sector as well. And what we're seeing right now is just the tip of the iceberg. What we're seeing is, we've seen unprecedented use cases and applications, and which has now been made available because of the advancement of AI. A typical example is chatbot, where AI has enabled natural language processing, natural language understanding, and generation. Similarly, there are different use cases such as customer churn predictions, where you can identify customers who are going to leave even before they actually do that. And it is AI which is enabling us to do that. Similarly, cross-selling, upselling opportunities, quantifying the actual probability of conversion rates. Similarly, digital onboarding solution where you're actually using facial recognition to onboard the customer and improving the customer journey and customer experience. So in the background, it is all AI which is actually enabling and helping us to do that. Then we have smart spending, smart saving, we have fraud detection, we have AML compliance, and etc. etc. There's so many applications, so many use cases which are becoming really mainstream within the financial sector, enabled and powered by AI. So in our capacity, in my capacity as head of AI also, so we are also developing these mainstream use cases, especially targeting the FI and banking sector through our Aon Hikma AI platform. We have developed and implemented use cases in regional banks, such as identifying customer churn with around 85% accuracy. We are delivering cross-sell upsell predictions with high probability of acceptance. We're working on anomaly detection, Hikma chatbot, Hikma recommendation engine for product, service, and offer recommendations, etc. And there are other AI technologies which we are currently building and developing right here in BCC in the Bahrain market. And even right now, if you look at, for example, the Saudi Vision 2030, 70% of the 96 strategic objectives are actually revolving around data and AI, and they are mostly linked to financial well-being of the citizens of Saudi. Similarly, around 77% of leading banking institutions in UAE plan to automate tasks through AI within the next 3 years. So I think AI, what we're looking at right now, is just the tip of the iceberg, and it's going to really completely change every industry in the next 5 to 6 years now.
Thank you, Atik. Yeah, that I read that statistic about the 70% of KSA having their plans be 70% being AI, and that really blew me away. It really shows what's coming next. So I think we'll skip to the next question. I think we lost Dr. Jassim. I think he's going to come back in a second. So we're going to skip over to Zaid. Zaid, because specifically revolving around what Karar does, I think you're best suited to answer this question as well. So can you tell me a little bit more, how can AI enable companies to score potential borrowers on their creditworthiness?
Hi, Nanda, thank you. And thank you, Aon, for putting together this panel. So this is a particularly hot topic about the use of AI in the context of creditworthiness, really, and I'll explain why. I mean, we know that lending is, the most important decision that a bank or a financial institution has to make, because it's so core to its business. So it's no surprise that banks and financial institutions have invested heavily over the years in trying to use data and analytics to be able to apply it to credit decisioning and to try to predict the creditworthiness of consumers. Now, these models that they built to help predict creditworthiness, they're typically built by analyzing large amounts of data about past borrowers to try to identify, relationships between variables and characteristics that can then be used to predict future behavior of similar borrowers. So that's typically how these predictive models have been built. But with more data becoming available about consumers, it becomes increasingly difficult for, using the traditional ways of model development to try to identify all the possible correlations between thousands of characteristics about their customers. And this is where AI really has played a significant role. And I talk about AI here, particularly in the context of machine learning, which is a analytical technique that is, kind of sophisticated, and it is a big enabler of AI. Because machine learning has the potential to develop superior predictive power, and it's able to do that by, its ability for advanced pattern recognition. So machine learning can identify, relationships among thousands and thousands of variables that are not typically intuitive using, traditional modeling techniques, or not easily revealed by the traditional modeling techniques, especially when it comes to analyzing what is known as alternative data. So when we want to start looking at people's social media data or telco information or device data, and try to use that kind of information and link it to an individual's credit risk, this is where AI and machine learning has come to play a major role. So really what AI means to creditworthiness, or to the assessment of creditworthiness, is an explosion in the amount of data and information that can be used to more accurately determine the credit risk associated with an individual. And this is important because even a 1% increase in that predictive power can, on one hand, mean millions of profitable decisions for banks, but it more importantly means that it expands access to credit to more people, to the unbanked, to the underbanked, achieve financial inclusion. And obviously, it also helps in enhancing the accuracy of prediction of existing customer or bank customer. So really, I wasn't surprised that in one of the surveys that I read by Deloitte Insights, that 70% of all financial services firms were using machine learning to predict credit scores and predict fraud. In a similar survey, it said that 77% of banking institutions in the UAE say that they plan to use AI, to automate some form of task, not particularly credit assessment and credit worthiness. In fact, we haven't seen, in particular in our region, Middle East and the GCC, we haven't seen the use of AI or machine learning in the credit risk space as much as probably has been applied in other regions. And I think there's good reason for this, because we have to remember that credit risk models were first established in order to address the bias from subjective decision making. So credit models were created, and we want to be very careful not to replace one bias-prone approach with another, because these AI models that are driven by machine learning, they are very highly predictive on one hand, but they're so sophisticated that it comes at a price of opaqueness of these models, let's say, and they're seen as black boxes that nobody can explain. And that's why the biggest challenge for us today is, how can we apply AI into credit models, but still make sure that these models are designed with fairness at their core, because we have to remember that we're doing this not just to become more accurate, but also to continue to be more inclusive. And there has been a lot of, obviously, advancement and the progress in explainable AI, or trying to explain these models and make them more transparent. So I think with these kind of advancements, you'll see a higher adoption of AI in assessing credit worthiness in the coming years.
Thank you, Zaid. That was really interesting. Yeah, I actually didn't know a lot of these things, so that's very interesting. And I didn't know that that's also a factor of why it hasn't been picked up in the Middle East yet, among many other reasons, of course. But yeah, that's great. Thank you for that. So I think we will go on to the, the next question. And the next question will be directed at Amr. And we're going to focus on the topic of AI's impact in finance in the GCC for the last portion of this presentation. So Amr, the question for you is, if you can just roughly give us a little bit of an idea about the ROI that we can expect for artificial intelligence implementation, given that it's not expansive here yet, as Zaid mentioned, and that it's going to probably be the next move for us, if you can see, according to Saudi's vision. So if you can tell us a little bit more about what kind of ROI we can expect.
Thanks, Imelda. I think, again, really interesting question. I wish I had a one-line answer to that to make everybody's life easy, but unfortunately not. When I start thinking about the ROI for AI, I think I always kind of keep saying, and I think in previous kind of conversations, I always kind of mention this. I truly believe technology is an enabler, right? And I think the way we need to see AI is no different than any other kind of a technology, which means it's still an enabler. And I think what I would kind of, the way in my head, I just kind of picture this, it's not really a technology. I would say it's a capability, within the organization. And again, you go through certain kind of maturity levels of that capability. And that capability includes multiple, sub capabilities, like, if you think about people, process, technology, etc. So you need to take all of that along with you to make sure that you are driving the right kind of outcome for the organization. So I think that's a starting point. As soon as we start taking AI as purely a technology, I think we're heading in a wrong direction. So the idea is that AI is a capability which can create an outcome, a positive outcome for the business and for the end customers or consumers. So I think that's the really, really good or great starting point. Technology is always an enabler, as long as we have a very crisp and clear thought process and strategy on what we really would like to achieve from it. So if I just kind of take some local examples, actually, because we do have quite a strong kind of a platform. I have seen, and we as a team have seen locally, that some efforts have come out really or produced really great outcomes, which means we have delivered really great ROIs to the customers, while some others like really not that kind of a great. And I think that kind of all depends how the organization is set up, how the organization see this capability to deliver kind of these outcomes for them. What I thought the better way to respond to this question would be to think about what are the core design principles we need to think through when we start thinking about ROI on the AI investment. So very first design principle which comes to my mind is need to have a very crisp business strategy. So when I say crisp business strategy, so again, there's a whole paradigm shift actually towards, let's say, technology at the moment in the market, like regardless of any industry, but I think financial industry is more to that. But then you have a very clear kind of a direction in your head and very clear strategy on what your unique position is, where you fit into the market as compared to rest of your competitors, how your customers see you, what's your brand kind of look like to your customers, what are core focus areas to achieve that unique position in the market, whether you want to focus on more personalization, customer experience, innovation, speed, profitability. I think that's a very, very kind of important part as well for the business strategy. So first thing is be very crisp on what needs to happen. Then obviously I've already talked about second design principle. It's all about see this as a capability rather than technology only. So make sure that you build this capability. And then when you build the capability, it should be aligned to your strategy on what you really need to achieve. And it needs to be aligned to, I think most importantly, you need to connect all the dots, because we have seen, or, as a team, we have seen multiple times, and I've seen multiple times that they always, something is happening in silos. And then you just kind of, you can just kind of really think about this capability and how you mature this capability. So you need to have a starting point, and then you need to have this target state where you really want to keep maturing this capability. Very importantly, I think Shiraz kind of mentioned this design principle as well. It's all about the problem at hand, what problem you're trying to solve. It's very critical to understand that problem. So once you have a very clear definition of that problem, then you can start stepping into this capability and how this capability can help you. Another kind of element, I think Shiraz and I think Atik did kind of alluded to that as well, is start small, right? We have seen so many times, you start like, organizations, they try to boil the ocean, they don't go anywhere. So idea is start small, look for the low hanging fruit. And then I would suggest to start with avoid moonshots. And a very simple kind of interesting read I was just kind of doing the other day. So, American company, this Anderson Cancer Center, actually research center. So they kind of started working with IBM Watson actually to create this AI capability, spent 4 years. Idea was that it would kind of diagnose and recommend cancer treatment, spend 62 million, didn't go anywhere. Whereas same organization, a very small project where the technology team was looking into how to offer the right hotels and restaurants to the patient families, it went really well, right? So the idea is you don't really go straight away to the moonshot. The idea is do a pilot, do a test, reconfigure, look at your organization. Again, people, process, technology, architecture, data architecture, governance, how much digital data do you have actually, how diverse that data is, etc. So there's all those things you need to make sure you consider before you kind of really go for this moonshot. So build small capability and then scale. And again, scale is really important. So once you have done this small capability, then go towards scale. and also consider factors like core technology, the data infrastructure, the security layer. It has to be very consistent. And finally, very importantly, or like two last points, is culture building within the organization. So basically, when you start moving towards AI-driven organization, there's a whole different set of skills and capabilities you require. And at the same time, a culture needs to change from towards like this very structured approach to very agility towards agile kind of organization. So that's kind of a culture you need to do. And finally, sponsorship behind it is really critical. So 100% senior exec sponsorship. So if you keep these, 6 or 7 design principles in mind, I think you are really good to go. I think that's the right approach towards the ROI. In our experience, a couple of use cases we have delivered, they kind of demonstrated that, ROI can go as high as, 600% plus actually. That there is a potential in there. But, some complex AI projects inherently involve a level of uncertainty and experimentation before they can reach to this level of maturity. So, as I said, there is no silver bullet, but I think they are kind of silver lining, I would say, and I think we need to keep these in mind actually as we go along.
Thank you for that, Amir. It's good to keep in mind that there's a lot of factors that go into how much ROI can be expected, and to start off little, basically to start off small.
Right.
That's the most important thing. So I think we'll just jump on to the last question before we go on to the Q&A. And the last question will be directed to both Zaid and Amir. I think we'll start off with Zaid, if you can, just from your experience and from your background, given that you work with advanced analytics and you work with banks and other financial institutions to support them with lending, how can hyper-personalized recommendations help customer success from your perspective?
Okay, so thank you. I think we believe that achieving, what's known as micro-segmentation and the ability to push hyper-personalized offers to consumers, we believe that this is one of the greatest and most profitable value propositions that is achieved by AI, because now banks and financial companies can offer customers the right product or service or interaction at that right time, and therefore increase turnover success and customer lifetime value, but also achieve enhanced customer experience. And we know how important that KPI is now for a lot of the industries, specifically banks and finance companies, because of customers' rising expectation that they want to bank anytime, anywhere. They want instant this and instant that. So the ability for banks to transform by offering intelligent workflows and reinventing their relationship model with with their customers is the key to success. And again, this is where AI came and played a major role. First, because it was a big enabler for digitization. There's no digital journey or banking digital journey out there that cannot be supported by AI, whether it's tools like identity verification or virtual assistants or AI-driven support, etc. But also because AI, as I mentioned earlier, was able to pick and recognize and decode and decipher the many thousands of signals that customers are now leaving behind digitally, which previously was not possible. And now we're talking about these tens of thousands of signals that AI tools can now analyze and use it to enhance product offering or enhance the customer experience by having personalized journeys and looking at the context and the aspiration and analyzing the the behavior of customers. Two particular examples from our region that I can give that we've seen firsthand is one in in Saudi Arabia, where banks are applying this hyper personalization at play, where they are bringing in large amounts of external data about their customers from credit bureaus and other external sources that are available, and then that they're using that data to provide personalized and pre-approved product offers to their customers. And they're doing that by looking at the customer's share of wallet, their affordability, what banking products they have with other providers, what products they've been applying to, looking at their risk profile, and doing all of this in split seconds, and then going immediately back to the customer in real time with a pre-approved, let's say, credit card. And that pre-approved credit card is personalized to that individual because they know his affordability, they know what limit they can offer them, they know their risk profile, they know that they want that product because they've been shopping for this product. So imagine the customer satisfaction when they've received a pre-approved product without the need to go through the lengthy application process. So, a huge kind of enhancement in the whole interaction with your bank. And another good example that we've seen is where today a lot of these credit cards, they provide customers with the same type of offers. So everybody that has a particular credit card from a particular provider has the same type of offers on dining or on shopping or on travel. But now you can start looking and analyzing the large amounts of transactional data and comparing customers, and then in real time trying to push customized offers for customers based on their lifestyle, based on what they would need. So you would probably get discounts on travel, while I would get discounts on shopping, or vice versa. But it will be so customized and in real time because AI has the ability to analyze all of that information and immediately push it to your app or your other channels that you can interact with. And obviously, there are so many other kind of examples of this hyper personalization in terms of e-wallets and budget apps that provide also that heightened level of customer satisfaction and personalization.
All right. So Melda, I think just kind of adding on to right, I think
Great.
the question was for both to us. So I think really good kind of setting the scene from Zaid. Just kind of perhaps take it to the next level. So just imagine, this, it's kind of there's a whole disruption in the market, right? It's the core business is changing. It's kind of turning towards more ecosystem. Rather than just kind of each bank kind of really guarding and closing their customers, or keeping the, we're talking about financial services here. So, keeping that kind of a really close tabs with the customers. So I think the whole ecosystem is changing, ecosystem is opening up, the whole platform economy is coming our way, and it's not very far. So I think one of the reports from McKinsey, it suggests that 30% of global economy activities, which is around 60 trillion, could be mediated by digital platform in 6 years' time. So it's not that far. If you really think about it, it's coming to a situation where you exchanging, value, right, between multiple parties. So no one party can really hold that value to themselves. It's basically exchanging value via multiple parties. So from customer perspective, it will be all embedded. It will be all seamless. It will be convenient. So from their perspective, it doesn't really matter whether it's a bank or it's coming from somewhere else. But as long as they get it seamlessly, I think they're perfectly fine. So think about this platform economy. Think about how it's shifting. So very simple examples. You think about service platforms. It's kind of a Uber, Airbnb, Lyft, etc. If you think about product platform, obviously Amazon comes to top of the mind, or eBay. Payments, you think about PayPal. And again, when it comes to service delivery, etc., you talk about Apple, etc. So I think, this this massive change into the direction the financial services is heading, there's one thing which the bank can really hold on to, and that's customer trust. So at this stage, although it's not very all-time high, but I think at this stage, customers still trust banks with their financial and personal information, right? So they believe that it's safe with them, and banks can, really guard that really well. But then if you enable that with plug and play infrastructure, platform economy, simply Uberization of banking, it's not going to be only in banks' hand to keep customers close to them. So what they can do actually to engage customer, and not only engage, retain customer for a longer period of time, this hyper personalization is the answer to that question. So even if it goes towards the platform economy, as long as banks hold that trust with the customer, that banks are providing the right service to them at the right time for the right reason, obviously using technology platform, I think that's the key differentiator, or will be the key differentiator between the successful organization versus the organizations who are going to go down, to be very honest. So I think this hyper personalization is not only about one thing or other, it's the whole mindset. It's about, do I understand my customer well? If I do understand my customer well, do I have the right data to really play back on that data? Can I reach out to my customer at the right time for the right reason, and offering the right products to my customer? So I give you a very simple example. In my head, when I think about hyper personalization, I keep thinking about even financial inclusion, financial well-being. I think that's the top of my agenda actually when I think about how we can offer these very tailored, unique services, products and services to customers at the right time via the choice of their channel. How we do that, that's another kind of a whole conversation, how we do that. But I think in principle, or again, going back to the design principle, that's how we should engage with customers.
Thank you so much for that, Amer and Zaid. That's a very good insight on how we can assure customer success from both angles and all angles. So what I think I'll do now is I'll bring this webinar to a close. But before we do that, let's get some questions from the Q&A. There's a few questions that have been already asked. So the first question, I will direct this to Amer actually, because I think working with hyper engagement and personalization. So the question to you is, how can increasing personalization and hyper engagement help customers make better financial decisions?
Thanks, Imelda. So I think I just kind of very quickly wrap this question up. I think most of the conversation I just did, I think it was all about that, right? So if we understand, and again, data is the key element over here. And when we talk about data, the data infrastructure, security, making sure, even as basics as data governance, data dictionary, all of that. So basically a golden record, if you want to call it. Once we start having those golden records within the organization, it becomes much more easier. But I think one or two taglines are around this. If we understand the customers better, we allow customers to interact with us via digital channels, and we get, I think as Zed was mentioning, we get a lot more digital kind of digital crumbs or whatever you call it about the customer. We have this capability using, cognitive insight, AI, if you want to call it. So we have this capability to really go back to the customer to offer them the right products and services. And by the way, and not to offer them the products and services which we believe might not work for the customer, right? And that's how it becomes so much easier for customer to start managing their finances in a much better position. By the way, some stats, I think the customers who are on this AI-driven hyper engagement kind of platform, they end up saving X2 times actually more. They end up managing their finances more than the customers who are not on these type of platforms, if you want to call it. So again, there's a massive kind of research as well behind this, and that's how we can really help customers to manage their finances better, and to make them aware what would work for them and what would not work for them. Actually, I think these two things are really critical for customers to understand as part of their financial well-being.
Yeah, I completely agree. And I can't wait for my bank to be able to do all of these things so I can manage my finances better. So the next question will be, I think, directed to Zaid, given again that you work with lending and advanced analytics. So how has AI been applied to improve customer experience in a collections use case?
Okay, so that's interesting because you wouldn't expect to see, the happiest customers in a collection environment, really. But collections and debt management has benefited also a lot from the use of technology and AI. I can think of a few examples. For example, debt simplification. So there's a lot of kind of fintechs out there now that are helping customers who are having difficulty, managing, multiple credit cards, and these tools have the ability to kind of help them decide which credit card to pay first, how best to, reduce your minimum balance, how effectively, can you go through reducing all of that debt by incurring the least amount of interest. So kind of these tools are there available, which are kind of self-help tools that can help an individual just him interacting with that technology to help them reduce debt. But from a more kind of bank customer relationship, what we see now is a lot of tools that are automated that interact with the customer. So they're less invasive in terms of and they're two-way tools, right? They're two-way communication. So the AI tools that reach out to the customer, remind them of their late payments. So the customer doesn't have to really talk to an agent and have that kind of difficult conversation. But these tools don't just achieve two-way communication. They are driven by a lot of sophisticated algorithms and models in the background that also inform the tool on the right amount to ask the customer to pay based on his affordability, based on his past performance, because the idea here is to bring back this customer to becoming a current and active customer. And the best way to use that is to achieve that is to help them kind of keep their promise. So if somebody owes $1,000, but we know by analyzing a lot of the information about him that he wouldn't be able to afford $1,000, then the best way is to ask him to pay what he can afford. So these tools become so intelligent that they then ask you for the right amount that you can afford to pay, get you to pay that amount, and then continue every month, looking at your history, looking at all of the information that's available, and making it easy for you to come back to an active current customer.
Thank you for that, Zaid. So I think we'll have one more question, and then I think we'll have to wrap it up. The next question is, I think it says, my question is, what regulations should be done to push AI models forward? What are some policies that would be functional for this region? So I think I'll direct that question either to Shiraz or Atiq, given that you both have the expertise in this.
Yeah, thanks. I think excellent question. Of course, this is one of the reasons why a lot of companies or the startups are not able to make progress in AI is because of these stringent policies and the regulations that are around AI specifically. I believe AI is kind of still a black box where there's only few of the areas in AI which can actually be called as the explainable AI. And I guess since it's no more an option to actually not infuse AI within your business, regulators have actually recognized it is a way forward. This is a business advantage. And not only that, it actually is the overall economy and the government's advantage. So regulators are actually making a lot of progress. And I would be very specifically about the Central Bank of Bahrain, because we've been working with them. They have made an excellent set of instructions and rule books, which also specifically looks after how and if a company wants to go ahead for an AI solution like ourselves, there's a preset process that has to be followed. And I guess I do not see that as any more a showstopper from the regulation perspective. Yes, you do have to look from the AI, the dangers of AI, things like bias, things like, those unexplainable results in neural networks, for example. So I guess the whoever is asking the question, excellent question, but I must recommend you to look at the CBB's website and the rule book specifically available on their website. It would help you to accelerate, your case if you're finding it difficult from the regulatory perspective.
Yeah.
Is Atik still online?
Yes, I am.
Yes. Atik,
So,
please go ahead.
Sure. So just to build on that, I think it's a very good question, and I think in the Western economies, AI has already been playing a very significant role, supported by the regulators. In the GCC region, also what we're looking at in the past 2-3 years, the regulators have actually really stepped up. In UAE, for example, they've launched the Ministry of AI. In Saudi, they've launched the Saudi Data and AI Agency. So the regulators and like CBP Shiraz has already mentioned. So the regulators are really stepping up in this region as well to support the cause of AI and to really grow this forward. There are still a lot of challenges. Obviously, we've just hit the tip of the iceberg. For example, the data residency is something which causes a lot of challenge, especially in this new cloud-based infrastructure environment. That is something which I think the banks, which by nature are very conservative, need to also become a little bit more open. And there also, like open banking is a regulation which has been pushed down by CBB in Bahrain, and also it is now something which is upcoming in Saudi. They've already launched the open banking policy paper. So the regulators, I think, have realized, the governments have realized the importance of AI, and they are actually really, really playing a very active role in pushing this to the banking and the financial sector to actually get the end benefit to the consumers. So in the next 2-3 years, I do see a lot more happening on this area, and inshallah, I think the regulators are doing a tremendous job.
Thanks, Atik. Just very quick couple of. I know we are running late. Just a couple of things on top. I think the key is data here. I'm sure as everybody must have figured out. I think the key is data here. How to manage, govern, secure that data. I think that's the most critical and important piece. And where does data reside? I think that's the most critical piece, which all regulators need to answer. I think and again, the answer is not only with regulators. The way I see this, there are three parts to this. One is the government, then the regulator, then the industry itself. So these three parts, they need to work together to make it happen. So I think it's really, really critical that we see this kind of a next step from all these three parts. There's a massive, awareness within the regulators. And again, especially when Atik mentioned about open banking, again, it's one part of that whole picture where the data is opening up, and how you kind of secure the data and how you can share the data. So I think once we crack that code with regulators, with the governments, and also with the help of the industry, I think we would be in a really good kind of shape to build some really exciting and innovative use cases on top of it.
Thank you, Amir, for adding on to that. Thank you, Atik, and thank you, Shiraz, for answering that question. I think now we are 5 past, so I will, I know there's a few questions left over. I think if anyone there are some anonymous questions. So if anyone wants to ask questions about this webinar, you can either send us a message on LinkedIn, or you can send us an email, and we'll have all our details at the registration page on LinkedIn. So feel free to ask any questions. Thank you so much. Thank you, Zaid. Thank you, everyone that participated in this event. Thank you, Kathy, for keeping our time in check. And yeah, and have a great rest of the afternoon.
Thank you very much, Imelda.
Thanks,
Thank you,
Imelda.
Kathy. And thank you, everyone. And special thanks to the all the attendees. Thank you very much.
Thank you.
Bye. Assalamu alaikum.
Bye-bye.
Thank you, everyone. Allah Hafiz. Take care.